Hello traders. Thank you for joining me today. I'm very happy to see you here. I make these weekly videos to show how you and I can analyze the market, trade in a disciplined way, and make a consistent profit in any market, be it up market, down market, or sideways market. There are some times when it is too late to buy, and yet it may be too early to short. If you are able to identify those situations, you may prefer neither to buy nor to short but to stand aside. Q has multiple ways of knowing such a market, and I'll explain some of those in today's market recap. You may refer to the masterclass videos that are on my YouTube channel to get all the other techniques to identify similar market condition in Q. Sometimes it is better to stand aside. How do you do that? One broad idea is this: if weekly is indecisive, or not an, or daily is indecisive, then it is time, or I may say it may be time to stand aside. Another broad idea is this: if the market is too overbought to buy but does not have enough weakness to short, for example, shorting using the box setup or headwind setup or even bounce setup, these are reversal setups at the top. If there are not enough signals to use those shorts, it may be time to stand aside. There are other ways to see if the market is overbought and not yet it is time to short using breadth insights. It's not about technical analysis on stocks, but using breadth insights like the sector industry stock breadth, technical breadth, market internal breadth, etc. I'll cover some of these approaches in today's session. Greetings, I am Sagar Nandi, retired IT professional, swing trading stocks in the USA and India markets using Q systems. You may contact me using my email ID info@superiorprofit.co or tradingprofitably@gmail.com. I regularly share live market and stock analysis always before knowing the results. On my website here, superiorprofit.co, X handle Superior Profit, and in this YouTube channel, Trading Profitably. All these are open to the public. I use all these Q systems components. All the Q components run on Metastock platform, and if you are trading in the USA market, the technical analysis runs on TradeStation as well. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky, does not have to be. You may refer to the characteristics and risk of standardized options document from OCC to decide if options trading is suitable for you. Now, before starting this week's recap, let's see what we discussed in the last market recap. There I focused on ways to anticipate and identify market reversals. And if you remember that session, almost everything that I anticipated came true with respect to the market, and the only two trade ideas I shared both were reversals, keeping in line with that week's theme of how to identify reversals. Both those reversal trades also made a profit. Why don't we look at those two stocks first? One was a stock, Coforge, in the Indian market, and here we see reversal in live action working beautifully. In the daily, it came to the long-term support, came to jump thrust low, price extreme low, gave a big move up 3, bull release. That was the time to buy. Stop would be just below trend line support. This should be entry. By now, it has given more than risk as a reward, and the trade would be closed with a profit. It would also be closed because it is very close to trendline resistance. This was a perfect example. Again, I shared before knowing the results, that shows the strength of the system and my discipline in following that. You may want to add that. Reversal said, right? Trade. Reversal buy, not a trend following buy. And the other stock, the only other stock that I mentioned in the last market recap was a stock in the USA market, that was Amazon. And the market was going up. Last week, market did go up this week also, made new all-time highs across the board, but Amazon, the only other reversal trade idea I shared in the last market recap, and I have two systems, so if one is slow, I can move to the other one. Though the market went up, made a new all-time high, I shared the Amazon short idea. It's a reversal short idea right at the top using false upside breakout, using the bearish headwind that was there at the same price level. Amazon nicely came down. This would be the entry price. Stop would be just above recent high. It covered the risk distance. I took a short in I took a long in Coforge. I booked profit in that. Amazon also I booked profit in the trade. Those were reversals. And now let's start with this week's market recap. Let's start with an external view analysis, that is using the market ETFs. SPY first. Made a new all-time high. What did I explain in the last market recap? We were here. I mentioned that when a stock or a market ETF is very close to being making a new all-time high, it usually does that. That was the anticipation. It certainly came true. SPY made a new all-time high. Weekly backdrop on the left is bullish color shape. Daily is going straight up. Is it too late to buy? That is the question I ask, and the answer comes from the stretch overbought band indicator. Last week I showed it was already overbought for 5 days in a row. Now it is overbought for 10 days in a row. It is too far from recent swing low, that is too overbought to buy, but there is no bear release signal. There is no magenta bearish color candle or red color candle. There is no false upside breakout. There is not enough signal to short. Too late to buy. Not enough weakness to short. The wise thing to do is to stand aside. QQQ. Made a new all-time high, just like I expressed in my last market recap. It went up. Now This is showing more weakness than SPY because in the daily it has not one but a cluster of bearish indecision at the top. That is a reason not to buy. It is also too high above recent swing low, and like in case of SPY, it is up by, not up, it is overbought for 10 days in a row. And I tend to look at the screen length. It has not happened like that in QQQ in recent months. It has not happened like that in SPY in recent months. That is too late to buy. But there is no red candle at the top. There is no false upside breakout. There is no bearish headwind. There is not enough signal to short. Too late to buy, not enough signal to short. Wiser thing to do is to stand aside. Daya. Also made a new all-time high. This also has more weakness than SPY because it has a bearish headwind at the top. We had a bearish headwind in the weekly already. Now we have a bearish headwind in the daily. We had a bearish headwind in daily earlier. The unique reversal signal pulled price down, weekly pulled price down. I'm still waiting for the reversal to happen. It has not created a false upside breakout yet. Overbought? Yes. Just like SPY and QQQ for 10 days, 10 straight days in a row hasn't happened in recent times. Too overbought to buy, not enough weakness to short. Wiser thing to do is to stand aside. By the way, for these three market ETFs, let me go back to the other two also. I will also like to point that though price has gone up here for DIA from the recent swing low quite a lot, volume is weak. We have some high volume bars in DIA, but if I go back to SPY, from the recent swing low, there is no high volume green bar at all. QQQ, from the swing low, it has gone up a lot. There is no high volume up bar at all. That is showing, just as I mentioned in the last market recap, I made this comment, market is going up, but as if on an empty engine. I was still buying as I explained in the last market recap. Now my view is it is too late to buy. And let's look at IWM. This is showing even more weakness. So SPY was the strongest. QQQ had some weakness. DIA had, and IWM didn't make a new all-time high. Even didn't come to this high. The new all-time high is further higher up. The last all-time high is further higher up. Didn't come to this high as well. It has a bearish headwind, also a cluster of indecision. More reason not to buy, but there is no bearish short setup. So not able to short as well. Better thing to do in my view is to stand aside. That is a look at the market ETFs. External view telling us to stand aside. What about breadth insights? Let's look at sector industry stock breadth first. In the last market recap, it was more green and I was looking for weakness in the 1 day or 2 day periods. And market hours, I could look at the real time period. We have some weakness. Long term, monthly and 10-day views are still bullish. This week is also bullish. We have weakness coming in on Thursday and Friday, but it is still mixed. It is telling me that it is weakening, the breadth is weakening for sector industry stock breadth. May not continue to buy, but not enough weakness is there yet to short. It's a mixed picture over 1 day, 2 day period. We may wait to see if the weakness increases next week. That will give us shorting opportunities at the top. If I look at the bucket analysis, it is bullish. 74% of stocks are above mid Bollinger Band, neither overbought not oversold. Percentage of stocks above upper Bollinger Band pulled down a lot. And again, like in last 2 weeks market recap I mentioned, this week also I observed the same thing. During market hours in real time, for a few days, the percentage of stocks above upper Bollinger Band jumped up by more than 10% and then it pulled back. That was trying to suck in the late buyers probably. Now it is not overbought, not oversold. Overall, the sector industry stock breadth is telling is weakening, not a time to buy, but not enough weakness to short. Let's look at something that I don't do in every market recap. There are many ways to look at the market in Q systems. Let's look at the indices breadth. We looked at the market breadth, but it will be useful at this point probably to look at the major indexes breadth from 1 month to 1 day. Now market is closed. During market hours it shows real-time breadth as well. Let's start with S&P 500 index SPX. From 1 month to 1 day it is clearly weakening. That is a reason to be cautious about buying now, but over 1 and 2 day periods, the shorter term periods, it is not bearish enough yet to short. Remember here we are looking at breadth. Earlier I looked at SPY, those were external views, price move, and here we are looking at advanced decline breadth for SPX first, then NDX, Nasdaq 100. Of if all these analysis align together to tell the same thing, then we may follow that. Follow what we see. Nasdaq also from 1 month to 1 day is clearly weakening, may be cautious about buying, but it is not enough bearish yet. 50-50 on the left side, not time to short yet. And I may look at the broader Russell 2000 also. I'll skip Dow Jones Industrials to save time. You could do that analysis yourself also using Q index. Again, a similar pattern from 1 month to 1 day, it is clearly weakening breadth. However, on the left hand side, it is not bearish enough to short. Not a time to buy, not a time to short. Better thing to do is to stand aside. You could even look at the very large composites. Again, to save time, I will not look at both of them. Let's look at Nasdaq composite. You could also look at NYSE composite, NYSE composite. Amazing systems, aren't they? Because it is able to look at the market in real time from all these different angles. Though I am doing this recap primarily for the USA market, I could do the exact same thing for any other market in the world. Why I came to the composites is to show not only the weakness from 1 month to 1 day, but also to show that the composites are weaker than the major indexes and composites are broader. What it shows is that yes, over 1 month, over 10 days, market is bullish across the board, but it is being held up more by the larger stocks that are part of S&P 1500, certainly Nasdaq 100, Dow Jones Industrials. Under the hood, if we look at the broad market composites, it is weakening and it is weaker than the major indexes, and probably the same picture will be shown from NICE advanced decline breadth. Here, one thing you may note here, over last 1 and 2 day periods for Nasdaq composite, it is telling us that it is okay to start to look for shorts. Here we have majority bearish, clearly more bearish than bullish over 1 and 2 day periods. That was not so for the major indexes. Some reason to look for shorts, but not enough. Not enough when we look at all the analytics together. You could, in fact, let me explain another thing that you could do. You could look at your trading universe. My trading universe is the liquid stocks only, 1653 at present. I could look at the breadth of that universe as well. How? I don't know which button I clicked. Sometimes I click the wrong button. It is doing something. I don't know if I clicked the save button by mistake. Anyway, it saved probably, no harm. I am going to create the breadth insight of my trading universe. Now, of course, breadth insight is useful when the number of stocks in the universe is broad. If it is only 10 stocks, 5 stocks, then the breadth is not useful. We could just look at those 10 stocks individually. That would be better in my view. But when we are talking about larger number of stocks, like my trading universe of 1653 stocks, I could look at that breadth also using Q Vital. Let's generate the scorecard, then I will look at that. Here I see the one-time breadth, 50-50, practically 50-50. Not enough weakness to short, but is it weakening? I can go to the scorecard and figure that out. If I go to the scorecard, usually I use only the vital panel on the left, but I could go to the performance panel further to the right, and let's start from 1 month period. Majority bullish, up, 1211 up, 416 down. By the way, for many of these columns that show percentage change or something like that, the advanced decline breadth is dynamically calculated in the header. So over 1 month period, it is bullish. Over 10-day, also long-term view, it is bullish, but you can notice the bullishness reduced. Over 5-day, this week, it is bullish, but further reduction in strength. Over 2 days, it is still bullish, but over 1 day, it is bearish, but not bearish enough. So whether I look at the major indexes breadth, the composites breadth, or my trading universe, which is broad enough, that breadth, it is telling that everything is weakening, but not weak enough overall to short. What about market internals? That is another breadth inside. Market breadth total view, the most comprehensive internal view of the market in a single colorful chart. At this point, using reversal techniques of breadth indicators, percentage of stocks above 50-day moving average and 3-month new high low, I mentioned I was buying live in that session. All those trades ended in a profit. It went up quite a lot from that swing low. For what? For the total view custom index. But what is absent is a single accumulation count, not even two. One is actually insignificant. It has to be at least two to be colored in green or cyan. Ones are neutral yellow, just an information, but not even an accumulation count of one in this entire rally up. That is in sync with the weakness we saw in up volume in the major ETFs. That is a reason to be cautious. And if I look at these stocks, if I go back to that chart, if I want to analyze this total view custom index using my entry daily chart, everything is on the custom menu. I just click the button to open it using entry daily interval chart. And why I came here is to show that it has gone up a lot, but last 2 days are down days. Last 2 days are down days with high volume. See the usefulness of the breadth charts. It is different from the market ETFs. Here I see that last 2 days down days with high volume, but it has not created the false upside breakout yet. Does not have any bearish headwind, does not have bear release. It is overbought, just like the major ETFs, several of them, 3 of them actually. The total view is also overbought for 10 straight days in a row. In every market recap, I am not able to spend time looking at all of this, so you may watch the videos and pick up the ways you can use the systems and then use it in your own trading. This is too overbought, but not enough signal to short. I'll not look at the other market breadths of the composites and the major indexes. You may look at that also. Probably that will show the same conclusion, that it is too overbought to buy, too early to short. Let's also look at the mega cap index. The mega caps have tremendous impact on the market, on some market pockets more than others, but they have impact on all the market pockets. Let's look at the USA mega cap index. Remember, in the last market recap, everything ties together well. I shared only one reversal short idea, that was Amazon. Amazon was a mega cap, and I mentioned, I remember in the market recap, you may look at the mega cap custom index also. We were here at that time, that was moving sideways with a bearish indecision cluster at that time. That allowed me to consider shorting Amazon. Amazon itself had a short setup. Of course, the mega cap custom index did not have any short setup. This week it has gone up, mega cap custom index, but it has not made a new all-time high. SPY did, DIA did, even QQQ did, which is most influenced by mega caps. What does it say? It says that mega caps went up, but they were not the ones driving QQQ to new all-time high. Some extent, yes, of course, mega caps always have a huge impact, but mega caps did not make a new all-time high. QQQ did. In the daily, we have now a cluster of bearish indecision. Another indecision or two came this week, and it is overbought for probably that same 10 days in a row, shown by the stretch band indicator. Too overbought to buy, not enough bearish signal to short, and here I will not short. Of course, this cannot be shorted. This is a custom index, but if it could be traded, I wouldn't short because it is near a trend line support that has to be broken. That has not happened yet. Last week I talked about anticipating reversals, getting ready for that. We are seeing it went up as I anticipated, made new all-time high as I anticipated, as probably you anticipated as well. It weakened as I anticipated, but not weak enough to short. And I would also like to look at another custom index that we have in Q breadth charts, that is the leaders index. I don't look at that also in every market recap. Leaders show the market from the leading stocks perspective. In a bull market, it is going up, straight up. When it starts to pause, then the leaders index changes. And let me try to open that. Leader index went up, but if you compare it with the mega cap custom index, it is weaker. In terms of price move, leaders tend to be the best performer. That's how the leaders are created. They're the best performers in the sectors. What happened after this rapid up move here? Displayed a cluster of bearish indecision. The backdrop color changed from bullish to neutral and then to magenta, rallied again, but this week's candle shape is weaker than mega caps. Did not make a new all-time high. For last 2 days, it fell down. We also have a bear release signal. Enough weakness not to buy, but I will not short based on this leader's analysis because it has multiple trend line support. So too late to buy, in fact showing some weakness at the top, but because of the trend line support I will not short. So we don't have, even from this angle, enough reason to start shorting, but enough reason to consider pausing on the buying side. I'm not going to look at many stocks today, but I look at technical breadth. Maybe I look at a few stocks also. Technical breadth weekly, and here technical breadth will show something different. So far we saw something different from Nasdaq composite, that it is telling it may be okay to start to look for shorts. That's what Nasdaq composite breadth showed. Everything else told is too overbought to buy, too early to short, except Nasdaq composite. That was little bit more tilting towards shorting. But if I look at the technical breadth, it will show the opposite thing. Weekly across the board bullish, except for reversals, but absolute number of reversals are much less than bullish setups, so that is not enough reason to start to short. If the absolute number of reversals were more than the bullish setups, then we could consider shorting. That is not the case. So this percentage of reversal trades has to be looked into together with these absolute numbers. It is bullish but not enough signal to short. Does not tell it is too late to buy. that will come from daily technical breadth. As I mentioned earlier, a technical breadth overbought signal comes when majority of the bullish setups come from price extreme high. This price extreme high is actually an extension measurement on the Q technical charts that is aggregated here. When majority of bullish setups are coming from price extreme high, it is too overbought to buy. We can still look at some individual stocks, but at market level it is telling to overbought to buy. On the other hand, if I look at the total of all setups, strength setups, continuation setups, that is telling me I can still look to buy. Like in the weekly interval, though more reversals are bearish, taken in total count, reversals are still less than other setups, bullish setups. So we saw two different stories being told by Nasdaq Composite and technical breadth. Nasdaq Composite breadth is telling it's okay to look for shorts. Technical breadth is telling it is okay to look for buying. And I looked at the peaks. It is having large number of flow bullish setups, possible bullish setups. We'll confirm it from the charts if we wanted to. Also large number of breakouts. So as I mentioned, when you see larger percentages in any of these, you could look at those pockets. It will be easier to look for trades there. So why don't I combine these two? Let's see if I can find some trades that are buying candidates this week as of now, that are both breakout trades as well as trend following flow trades. Now, though I am going to try to look for such trades, remember market level is most important, and market level is telling it is better to wait. And I bought stocks earlier. I booked partial profit in some of them I booked full profit, but I'm holding number of long positions still. I am in no hurry to close them because market is not telling me to short me yet, and those stocks have not hit stop yet if I had a trailing stop on them. So I am still participating in the up move if market continues to go up, but I am not buying at this overbought level. Having said that, because it is showing some reason to look for buying, let me try to find some. I'll try to combine flow with breakout. Go to the bullish technical setups, flag the bullish flows, flag the breakouts. I am left with 17 stocks. So remember, my liquid stock universe is thousands of stocks, but after doing this market level analysis and looking at technical breadth, I'm left with 17 stocks, but I'm not going to look at 17 stocks on technical charts. I'm going to calculate their fundamental scorecard first, because I don't buy stocks that are fundamentally weak. Just takes a few more seconds to estimate that. Let's do that. Let me click the green one star button. This is not a roaring bull market, already overbought, so I can settle with 1 star. But I'm not going to look at all these stocks yet. I'm going to look at their industries. I want to buy in strong industries and in strong fundamental stocks. These are the industries I could look for, either the strongest industries or most accelerating industries. These are few. I see gold, I see alternate carriers, oil and gas storage and transportation, construction, engineering. Let's go back to our stock list. Now I am left with only 6 stocks starting from thousands of stocks. What are these stocks? They are in the strongest industries or most accelerating industries. They are either undervalued or having high earnings growth. They have at least one or more trade setup. Let's look at their setups again. Go back to the same 6 stocks technical setups again. I started with stocks that have flow as well as breakout. And one pattern, remember the full capital columns here, they are the setups, and these actually these 4 columns, the heading is in small, all small cap letter, those are patterns. And I don't discuss all these details in every session. They are not required to know those things for trading. It's just an internal thing. So these are patterns, all small letter, and these are setups. And there is a difference between setup and signal and pattern. Setup is not a signal. It is a combination of signals that are confirming the setup, at least in the daily interval, and then we'll have to look at the chart and apply the conditions on weekly interval as well. That is setup, not a signal but a setup. And pattern is also not a signal, and it is not happening over one day. Patterns are always happening over multiple days, but setups are coming on one day, signals may come on one day interval, but these patterns are always evaluated. Whenever you see all small letter, they are always evaluated over multiple days. Just a technical detail, does not affect our trading. One pattern that is of interest to me and to many other traders, including Mr. Mark Minervini, a famous trader, is to look at stocks that are breaking out of squeeze. I'd like to look at this Liberty Global, but now is the time to do two things. Look at Liberty Global on technical charts and also to look at its one-page scorecard. Let's look at the stock LBTYK. That was the ticker symbol. Beautiful. One glance at it and I think it is beautiful in the current market condition. What I have is a triple bottom in weekly. What I have, or you have, we all have, is a bullish indecision cluster right at that triple bottom that held very well here, that held very well here. I'm expecting it to hold very well here, and we also have a pattern that is an indecision candle followed by a very bullish shape candle. That itself is also bullish, and we have in terms of Q signals, now signal not pattern, a indecision at the low bullish signal. If we look at multiple of them together, it becomes a cluster that is a pattern over multiple days. We have a signal tick, the flow signal, that is bullish. So weekly is telling everything is all good to buy, and weekly went up on high volume. Weekly moving out of price extreme low. Everything in weekly is telling it is time to buy, closed right at the high. In daily, it was inside a triangle pattern. Before that, it was creating a base. Just on Friday, it broke out beautifully of the triangle pattern, closed right at the high of the day. That is a stock I would like to buy if my market view was bullish. It was not bullish. So even in spite of that, if I wanted to buy LB2IK, I did not buy it on Friday. But if I want to buy it on Monday, I may watch it along with the market, and I watch the market using Q edge during market hours. I watch the market using market percentage chart in real time, and I also look at the market futures or indices or ETFs in real time. If all of them tell me that it is okay to buy, I may not hesitate to buy LBTYK, and sometimes I get lucky. I identifying this stock now, if it opens a little lower and then breaks out of this daily trend line resistance level, I have a slightly better feel. So I'll keep an eye on this stock. And lastly, I would like to look at its one page stock scorecard, LBTYK stock scorecard from Q Vital. It has high growth and accelerating growth, earnings growth. That is a reason to buy. Valuation is medium, that's fine. That is the reason I can find to buy. 75% of stocks went up. We already know this industry is either very strong or accelerating, but now we can look at this particular industry score using QH. See, when I do the analysis, I do it over a number of stocks, shorten the list very quickly, and before buying, I look at that particular stock's technicals, fundamentals in one page, and also that particular industry score. That alternative carriers industry score is looking great, one of the strongest, 150 score out of 154 industries, very strong. Just look at the cyan color checkered background, top 20%, and it is also accelerating, and of course it is accelerating. That is a stock to buy using 360 degrees approach. And another thing I do when I find a stock like that, and I already generated the scorecard, I see if there is any peer stock that I could buy that may be better or maybe at least as good as this. If it is worse than this using 360 degrees analysis, I wouldn't buy that. But if it is better, I would probably buy that one instead of LBTYK. And if it is equal, I might consider buying both, but maybe reducing size in each of them. Let's look at the peer stocks. Remember, this is high growth stock. It is a 1-star stock. Let me click 1 star. I know the industry is strong enough. I don't have to look at the industry. Instead, I will just look at these stocks technical signals. One click and I can look them up from Q Finder. Look at only the stocks I'm clicking here, which has a possible setup. Liberty, I have already seen. There is another Liberty has multiple share classes, so I'm not going to look at LBTYA. LBTYK, that is one class of shares for Liberty Global, I have already seen. I see another stocks in the industry, so industry is strong, fundamentals 1-star strong. It's time to now generate a 1-page scorecard for this stock and also look at the technicals, and here I see something else. In terms of patterns, LBTY K had squeeze move pattern. That's an attractive pattern for me. And Iridium communication IRDM has a price extreme low pattern. Both have flow and breakout setup. So price extreme low pattern is also very attractive to me. So let's look at Iridium IRDM. Fantastic. Just one glance, it is a stock to buy. It is a bit stronger than LBTUYK because LBTUYK is here now, creating a base and starting to go up. Iridium has already gone up, created another swing low, now giving a trend following long setup, and it is also breaking out of this trend line resistance. There is no trend line resistance nearby. Weekly had the bullish headwind, it had jump thrust low. In fact, let's look at it on daily. Jump thrust low, price extreme low, all of a sudden came big move up 3. Almost never fails to go up after that in a strong fundamental stock. So we could start to look to buy right from here. I did not. It went up, but this pattern proved its usefulness once again here. Now we have the first possible trend following long setup. Until here we were in a downtrend, then the downtrend was broken. This is the first time we have a higher low. This is the first possible trend following long setup. Q identified at the best possible time. Once here with big move up 3 at jump thrust low, price extreme low, and now today using flow and breakout setup. And I will lastly look at this stocks 1-page scorecard, Iridium. Valuation not good, but that's fine. Has high earnings growth. It is reducing earnings growth, but still very high. We saw the chart pattern to be very strong. And the last stock LBTYK did not have any dividend yield. Here it is not very high, but in terms of dividend yield, it is better than the last stock. It's large number of stocks going up in the peer. So we have both these stocks that one could consider buying in same industry. So if you don't want too much concentration in one industry, of course two stocks cannot give too much concentration in one industry, but looking at the market condition, I may see how these two stocks are moving next week and then decide whether to buy or wait based on the market condition. Let me save these two stocks, Iridium and LBTYK. By the way, silver went up a lot. I don't cover all the symbols in every market recap. Silver went up a lot. I would not like to buy. It is too overbought for my liking, but it did go up nicely from the swing low. So did gold. Underperformed silver, but it went up. Now, when I saw this gold chart, it reminded me of a stock I shared in one of the recent market recaps. That was gold. The ticker symbol was gold. I identified it somewhere here, don't remember exactly when. That stock has also gone up and covered the risk distance. I booked profit in that also. So as I mentioned, I started buying using the market breadth total view oversold condition somewhere here. Most if not all of those stocks have given a profit. And I just remember one more. Again, I am sharing only stocks that I shared before knowing the results, not just picking up arbitrary charts. And this is an important chart also in terms of lesson for swing trading. I shared GPS as a buying candidate here. Had weekly holding price, had a bullish headwind, the unique reversal signal right at the bottom. That would be the time to buy. This is the buying price. Stop would be just below trend line support. And as Q guideline is, once the risk distance is covered, we would book profit. After that, it weakened a bit. The weekly is looking quite weak, but that is of no concern to Q traders because we are already in profit, and if we are still holding partial position, we are having trailing stop to make sure the trade as a whole is profitable. So this trade also closed with a profit. That is how in any market condition I, and if I can do that, I am quite sure you can do that, can find trades and make consistent profit. Thanks a lot for joining. I look forward to seeing you in my next session. Have a great weekend, and as I always say, as these live examples hopefully show, there is no reason not to do that. Trade profitably. Thank you.